Welcome to my channel. This week we had a fantastic rally with respect to Nifty 500. The broader market was supporting well and slowly the market is recovering owing to the news coming from US and Iran war and Strait of Hormuz being open. Now coming to the part, this week we are not going to discuss on the numbers but instead we are going through the overview of the entire broader market indices. Moving on to broader market, Nifty 500 has been performing well over the past weekend and the week, and we can see that the affirmation with respect to the price action is pretty much clear. Two successive weeks of continuous buying, and we can see a bit of pause coming to the 50 days moving average over here. We can expect some kind of stagnation or a pullback from this point. And we have made a clear cut bottom that is owing to the end of March, that was in the beginning of April. From there on, there has been a fantastic run up with respect to the broader market. Now let's see which are the sectors which are lagging and which are the sectors which has kept on moving up even when the tougher phase was on. Moving on to Nifty IT, we can see the structure has been pretty much weak and we are in the consolidation zone and we are anticipating a smaller push-ups here. But on the broader perspective, we can't expect another bull run within Nifty IT. But we definitely need the support of Nifty IT for Nifty to make next leg of bull run. As you can see, the pharma sector is also setting up nicely. Over the past 1 year, the returns have been pretty much nominal. And these are the spaces which we can look into when the market is falling. In the past, IT, pharma are considered as defensive sectors. And since defensive sectors are not outperforming, it says that risk is on. That means the money will be flowing from the risk of assets to risk on assets. There is high probability which could happen. And moving on to Nifty Auto, 50 days moving average has crossed 200 days moving average on the bottom side. And it is still trying to recover on the same spot. And also from the larger perspective, the setup is not so great and the price action is still lagging behind from its all-time high. The same pattern is observed in Nifty Healthcare, Nifty India Digital, and more or less nearly at the Nifty. But with respect to the longer perspective of investment, Nifty acts as a baseline benchmark, which is a strong sign. Now moving on to finance, this is one sector which showed the promise but still not keeping up to the marks because the pullback has happened from the February of this month and from the past 1 year the setup has been pretty much good. Like you can see, whenever the broader market was correcting in the month of January 2025 to April or March of 2025, capital markets were trying to outperform the broader market. Now there has been a sudden pullback. We can anticipate that this could continue for a short run and the correction or the uprunning bull run can resume in finance. Same with respect to Nifty PSU Bank. Earlier there was a pullback in the year of 2025, but again post that in the month of September 2025, the bull market started with respect to Nifty PSU Bank. So there is a pullback with respect to the price action. And we can see that financial section is under pressure altogether. Same with respect to Nifty Private Bank and Bank Nifty as well. So financially, we are not in a situation where the bull market can resume with respect to finance. But on a hindsight, what we can understand is like that is a space which is we are supposed to watch out for in the longer run, because if the finance cracks, rest all sectors will be by default affected. It's just a chain reaction altogether. Now coming to the Nifty large cap, Nifty 100, there is a slight amount of promising signs, but still it is not affirmative. The structure is not yet great. Now let's visit the other sectors which are trying to break out from the past. Nifty Realty, no, it's not still great. Let's ignore this part. Nifty Metal, you can see the price action. The clear-cut sign saying that the correction started from the month of July or September of 2024. It went on. Post that, Nifty Metal has not burst to any kind of external pressure. It is clearly indicating that we are in a commodity cycle, wherein the bull run is resuming in commodities, and see the fantastic setup over here. The actual breakout happened in the month of October and it sustained. Even this leg of correction did not affect much and the price has clearly bounced back off its actual position, which is a very strong sign. Other promising sector is Nifty Mid Select. From this we can observe that the price action is pretty much clear. The market has recovered. The recent correction has been overcome within just 2 weeks of the fall, which is a very strong and healthy sign with respect to Nifty Midcap or Mid Select. And also with respect to micro cap, in the past there has been a bounce. At this point it is setting up cleanly and we can see there's a sloping channel here which ideally forms on the line, and we are nearly on the verge of breaking it. So which shows that Nifty micro cap also has the potential to give stronger returns in the coming days. Now moving ahead with Nifty Midcap. Again, the setup is pretty much great. It is fantastic. We can expect next leg of bull run in Nifty Midcap as well if everything goes fine in the next 2 to 3 months. Now one more surprising sector is Nifty Junior, or the Nifty Next 50 what we call. This has set up pretty much comfortably, and we can see it is about to break out from its previous trend, wherein the previous near time high will be broken off, if at all, if it happens in the coming days, which is a very healthy sign, and investments will flow definitely. Now moving on to Nifty Small Cap, again we are on the line of near the trend line, and as I see, if at all, if the breakout happens, it's a very strong sign. So what does it say altogether with respect to this particular market? There is potential with respect to small cap and mid cap, and the stocks from these space are going to be having the next multi-baggers. How to identify them? We'll come to that part later. And prior to that, observe Nifty defense. The setup is pretty much great. It is about to break out. The same happened in the month of April, May, when the broader market was getting beaten down. Nifty defense was holding up. So now it again has recovered. In order to make the next move, we can see that Nifty defense stocks are going to make stronger bets. Same with Nifty Energy. Earlier my investment was started with 37,000 level, and there is strong positive sign, and I have completed my investments, I would say, to be honest, and there is a strong sign altogether. Now one stronger thing is with respect to Nifty manufacturing space, that is FMCG. Over here the market is pretty much weak. This is one space I'm literally going to avoid in the coming years, and these are the blocks which are holding on Nifty from moving up, like Nifty IT, Nifty Pharma, Nifty Auto, Healthcare, Nifty India Digital and all. Again, things which are holding up is Nifty Metal, Nifty Midcap, Nifty Select Midcap, and Nifty Small Cap, Nifty India Defense and Energy sector. So it is a clear indication that commodity cycle is on, and we are going to see a broader market run with respect to commodities. Now, how to pick stocks from any of this sector? That is a major challenge altogether for anyone or any individual for that reason. So I would preferably avoid the stocks which are falling in the space of the weaker sectors. I'll prefer to pick up the stocks which are moving or pretty much doing well from the stronger sectors. How to pick one? So let's take up Nifty Metal here. See, basically Nifty Metal is a combination of around 10 to 15 stocks from the metal universe. Now, how to pick one? Pick up any of the stocks within Nifty Metal and observe the charts. And if the recent correction has not made that stock to fall more, then that is one stock which is going to give good returns in the coming days. That is how we pick the stocks. Invest in the leaders, and also we all tend to focus on the stocks which are moving stronger from Nifty small cap and mid cap space. Let me just give you an example with respect to how we can pick it up. Go there and say Nifty Metal Index. Once you type, we will be able to see the Nifty Metals part, and within that look into the stocks which are making the next higher leg of returns. Let's look into the kind of stocks we hold within Nifty Metal. Yeah, so we are at Nifty Metals. See, Nifty Metal is a combination of 15 stocks. Out of that, pick any one of stocks. This is not a recommendation. Do your own analysis before investing in the stocks. Please do not consider this as an investment advice. This is just a methodology. Now, out of these stocks, we will be focusing on any one of the stock which is giving broader market returns, which is making a good run up, and from there we're going to pick up the stock which is performing well. Now, from my perspective, why I invested in ETFs in the initial correction phase, and now I'm moving on to stocks, it's pretty much clear. In the initial phase, ETFs are going to underperform, but over time they are going to give the stability to your portfolio. Now, in the correction phase, stocks tend to fall more than ETFs. Since they are very much volatile when compared to ETFs, I prefer ETFs. And when the up leg starts, I prefer to invest in stocks. That is how I would manage my portfolio altogether. I hope this gives you an idea of how the investments can be taken up further. Thanks for watching the video. See you next week.